Hello, this is Tom Cloud with this week's Precious Metals Market Update. The last week has been one of the busiest weeks I've ever seen in my nearly 40 years in this business. The thing started last week with the devaluation of the yuan in China, and with the 5% devaluation over a 3-day period, you thought that China was chasing commerce by trying to bring their currency down where their goods would be more affordable and they could sell more things in the world market. And of course, that was the intention. But what really happened was it started a race to see who could sell their currency off the fastest. As I taped this on Tuesday morning, we've now seen the dollar go down 5% in a week, as well as the yuan, because if they have a competitive advantage in selling goods in the world market, then our economy will go immediately into a recession. And hang on to that, because it's very important what I got to say in a few minutes about that. So if the economy is going to go in the tank, what happens? They either let it go in and get what we call a natural cleansing, like Ronald Reagan had in the early 80s when things got out of control, or you try to head it off by printing more money. And certainly the quantitative easing has already started in China, because they do not want a strong currency, they want a weak currency. We do not want a strong currency, we want a weak currency. So just think of it this way. Every dollar 8 days ago you had in the U.S. banking system has lost 5%. Every ounce of gold has gone up exactly 5% in a week, from 1086 to 1150. So you've seen the direct correlation of money, the value of the dollar going down. We've now seen the dollar drop from 98 on the world market down to 93 and change. So this is going to continue. Now, going back, the number one question I'm getting and flooding into the office through emails, voicemails, phone calls is, why is silver going down when gold is going up? And the answer is simple. We're in a 3-stage situation where people identify that a currency is going to go down. They just don't know exactly when it's going to start. All the fundamentals are there. They know the currency can't stay where it is. So they begin looking for alternatives. Gold and silver are part of that. Then you have the economic part of it. Remember that silver is an industrial metal first, an investment metal second. Gold is money. Gold has been money since Genesis 2. Gold was money till 1971. You could walk in, take 32 paper dollars and get an ounce of gold. That no longer exists. We now have money by decree, fiat currency. So what you have right now is people worried about the world economy. Yes, China and U.S. look terrible, and yet they keep talking about raising rates in the U.S. Do you have any belief they're going to do that? 19 months they told you they're going to raise rates, and the markets go around and take advantage of people. They know they're not going to raise rates. It would put the U.S. economy into a tailspin. Anybody with common sense knows that. Now, at some point, they'll have to make a token 0.25% rate hike just to say, we told you so. But that's not in the cards anytime soon, even though they keep telling you that it is. So what it's doing is the economy is still looking recessionary to a lot of large investors. Now, let's go back to 2008. Silver went from 15 down to $9.80 between June and November of 08. And I kept telling people it's very similar to where silver is today at 15. You buy now. Don't wait till they have long delays. You buy now because they're not going to let the world economy go into recession. They're going to print money. We're going to be back in a QE next year. China's already in a QE. Germany is in a QE. We're going to see all these countries of the G20 quantitative easing, printing more money out of thin air to keep the economy. So when silver does move, it's going to pop. It's going to go from 15 to 30 in a year or two. It could go from 15 to 45 in less than 24 months very easily. So the reason you wouldn't want to buy silver is if you believe we're going to have a worldwide recession. You should not buy silver except for having some for emergency and barter purposes. So it's very important that you look at that. So what do we expect now? I need to tell you a little bit about delays. It's hard to believe silver's going nowhere, and we were informed this morning our silver rounds, the place we buy in Highland Mint, has 8 times the normal orders. And now we're backed up 60 days. And orders you do today and forward, now there are some silver we can get in 2 or 3 weeks, but you'll have to call in when you're ready for silver. But just know there's delays on every kind of silver, but you're important to get in there. And remember, I never pay our suppliers until I have a shipping number that your gold and silver has gone out. Now, gold is going to get tight. It is tight, but not like silver. We still have several products that are live that we can deliver as soon as we get payment. Now, the ratio last week, gold was 73.5 times more valuable than silver. Now it's 78 times more valuable. So we see the gold moving up because the central banks and large investors that are not speculating in silver but trying to buy gold, knowing it's part of the permanent fix eventually in the world monetary system. So gold right now, if you're interested, you should be buying. The last thing to talk about are the biblical issues of September and October. I'm not going to get into specifics. You can go on Google. You can Google Jonathan Cahn, the mystery of the Shemitah. You can go on YouTube and put in Jonathan Cahn. I think it's a C-A-H-N. It may be a K. But anyway, it's worth your time to look as history repeats itself for the stock market to drop over 25%, and it's well on its way to doing that already. And the Shemitah actually starts at the end of this week. And for the next 60-day period, we've got a 1,420 month biblical cycle. We've got blood moons. We've got a Jewish New Year, Feast of the Tabernacles with certain things falling on it, plus the Shemitah, where the stock market has gone down over 25% every 7 years, starting in 1973, after Nixon took us off the gold standard and honest money and honest weights and measures in 1971. So I've said it last week, and I'll say 2 last things in closing. Is number 1, there is not a better insurance policy in the world than gold and silver right this minute to get your money out of the potentials that could happen in September and October, at least with part of it. Worst case scenario, you lose 5% and you sell your gold and silver, and happy days are here again in the economy. I don't think that's going to happen, but if it does, you'll at least be out. Because remember, the last week, you've lost 5% of your currency value by being in the U.S. dollar, anything denominated. So I will say that you need to positively take advantage for that. And then lastly, if you want a precious metals IRA, you need to get moving. The delays now are 2 to 3 weeks in setting them up. They were a week. The custodians are swamped under. So if you're going to get one in order, you need to call us and get started to where you can take advantage of getting your money to physical gold and silver before the middle of September. And that's very important to do if you're interested. If you're not getting my email blast, or you can sign up at FTM Daily. We put out a couple emails a week, keeping you abreast of what's going on in supply, prices, specials, economic situations. And you can go to ftmdaily.com/gold or precious metals. Sign up. We don't share your email with anyone. And if you have any questions or want to talk about a purchase, you can call us at 800-247-2812. Till next week, this is Tom Cloud signing out.